bankruptcies and foreclosures, those types of credit, um, I don't want to say those blemishes last a lot longer on your score, and they're going to depress your score a lot longer. Welcome to the Moms Makin Dough podcast. I'm your host, Kendra Hewitt, and today I'm going to be diving in to credit worthiness. This has been a question that I have been getting a lot from both business owners and on a personal finance side, and it's something that, ironically, I'm very passionate about. And so I wanted to dedicate an episode for credit worthiness, not to be confused with self-worthiness. So today we're going to dive in to credit worthiness, how you build it, how you fix it at times, and also to just things to consider as this as such an important tool to building not only your personal finances, but your professional ones as well. So, I want to kick off today with a story because this episode I was scheduled to do. And ironically, I feel like when I start to put out there and manifest what I want the episode to be with, stuff starts showing up, both good and bad. So, a couple things I want to kick off with today. One's a story about actually my husband and kind of recognizing and celebrating a win. So, as I've been recording the podcast the last couple weeks, I have really just made sure that if I am teaching something, I'm also checking in with myself is like, hey, have I looked at that in a while? Where do I stand? What are some of the action steps I need to take? Because I don't want to be teaching anything that I would not be doing myself. So I ended up having a conversation with my husband a couple weeks ago where we looked at the last quarter, just how we were spending our money in preparation for some of the things, the bigger purchases that we know are coming up down the line over the next couple months, and making a action plan for how we're going to pay for them, what order they need to be done in, and that sort of thing. And one of the things that came up was us starting to talk about just like checking in on our own personal credit, because we're starting to do where we have like a joint credit card, which after 14 years, I guess is something we should be doing, that where we like put all our groceries and manage some of our spending a little bit more cohesively so we can see like and hold each other accountable was really the beginning of the conversation. So, one of the things that came up was about how we looked at some of the balances he was carrying. One of him was his auto loan, and I did not know this, but I thought he had paid it off. And turns out that he was still paying it, even though he had the money set aside to do it. So he just needed that little push and that conversation that was the right thing to do. So he did that. He paid off his truck, and I was so excited because we got his title in the mail that it was paid off. And I just started I celebrated some of the momentum. I was like, "How did that feel? How's it gonna feel to put that money into your another place instead of something that you're paying every month where it's just cash flow going out, but it's also costing you money?" And it was a really great conversation and just like fun. And one of the things I noticed is I didn't know it at the time, but it built some momentum for him. And then come to find out, a week or two later, he sent me a picture of his credit score. And this was also something we had talked about at the meeting, just about how like quarterly running our credit score, seeing where we're at. I told him about some credit moves I was going to be making on the personal side. And it was so interesting because randomly, he sent me a picture of his credit score. And he is one of those guys. He's Canadian and he is extremely disciplined. And one of the things he was always chasing was he wanted an over 800 credit score. And the reason that this was really important to him is when he moved here 20 years ago to go to school. Man, I sound old saying that. He had he didn't have any American credit. So one of the things that we started when we knew we were gonna get married was that, I put a lot of the credit in my name. Like, when we bought our house, it was in my name at the first because, like I said, he didn't have American credit profile. But because he didn't have American credit profile, this is where I really started to dive in to helping him build some American credit. And I had some experience with this in the past because I had helped a few friends repair some of their credit from their younger days where they were not as smart with their money. And it just built this kind of momentum of fun, element of fun for me. I know building credit doesn't sound fun for most people, but I'm hoping that I do that today. So back to the story with my husband. So he sent me this screenshot, and his credit was top score you can get on your credit is, I believe, 850. I guess I should say that's the highest that I think the most bureaus will go to, which we're going to dive into today. But, he had an 831 credit score, and he was so excited about it. And I was so excited because I remembered it brought me back to that conversation about when we, he had none, and about how important it was to establish it. And, so fast forward to this week, or actually, I should say the end of the last week. This is now 3 weeks since we've had this conversation. So week 1, his action step was he paid off his truck. Small win, right? Week 2 was that he, shared that credit score with me because the minute he paid that off, his credit score really jumped, which was super exciting. And then the real finale, I feel like, of this 3rd week of just making some small shifts and making an action plan was huge. Is that without telling me, I knew he had a Canadian student loan, a line of credit, because he did not qualify for an American line of credit to come and pay here to go to school, like all of us US kids take for granted that that's an option. So he had a line of credit. It was for his doctorate degree. So he had paid and worked through college for his undergrad and paid for that himself, by being a bartender, and then he was a professional fishing guide. And fast forward to wanting to become a doctor. He wanted to get his doctorate in the States, and, but there was no financial aid application for a Canadian at that time. So he had taken a line of credit through the Royal Bank of Canada, and all my Canadian friends will kind of cringe when they say that because that doesn't have the best reputation. And it was a very high interest rate at the time, specifically because it was a line of credit and not a traditional student loan, right? So usually student loans are lent out at a much lower rate. So fast forward to bring this story to kind of a intro story to a close, was he sent me the other day, a screenshot, and it said, "Congratulations, your loan's been paid in full." Now, what's crazy is that I thought about this, is that I wasn't actually positive that it meant that it was his student loan. And I knew he was getting close, like I said, and, so I messaged him back. I was like, "Is this your student loan payoff?" And he goes, "Yes." And I was like, "This is such a huge win." And in this moment, I noticed a couple things. Number 1, it was such a great reminder of, for you to really get into the gain where you see that win, you really have to remember where you came from. So, where he came from was, like I said, no options for American student loans, Canadian line of credit from his local bank, co-signed by his dad. And I'll tell you this, that loan originally was well over close to $200,000 for his doctorate. Now, a doctorate in the US is actually double, to the best of my knowledge. Definitely for the one he got, I know the cost of it is double, which is mind-blowing to me. But this was 20 years ago, making me sound old, but I digress. Back to the story. So, with that said, so Ryan paid off this loan, and I was like, "Holy shit." I had this moment where it was so gratifying because this was a first time in a while that we had worked together and kinda came up with an action plan when it comes to our personal finances as a couple. And we also talked about our individual stuff. So we brought our individual stuff to the table. And I was like, holy shit, he got some momentum and then he used it to keep going. And it's where that the concept of the snowball effect really took place in my mind, is that like small wins lead to momentum that lead to bigger wins over time. Now, granted, this was a short period of time, but the period of time to cover this loan was so much bigger, right? So 20 freaking years. And I remember prior to us getting married, now, first of all, let me state this. I had no student loan because I paid for my first semester of college and I had some scholarships. My mom helped me. And I was really committed to not having a student loan. Well, thank God I didn't take that student loan that was options because I realized that college, the route of traditional college, was not for me. So I actually dropped out of college because I had started a business and I was enjoying that so much more than actually being in school. So, I came into our marriage with no conversation about I didn't have student loans. So I had, some personal credit card debt for sure at the time. I actually had some business debt at the time from my business that I had leveraged, but not a significant amount and a plan to pay it. And then on top of that, Ryan comes in and he's like, "Well, I hate to say this, but I have a 200 almost $200,000 line of credit that I pay." And his payment at the time, again, it's a line of credit, was close to $2,000 a month. So at that point, that was an apartment rent. Now, that's not an apartment rent anymore here in Massachusetts. But I remember just being, like, digesting, "Holy shit. I'm marrying a guy bringing in $2,000 a month of debt already." And really coming from a place where I didn't have that, um, figuring out what that meant to me. And the reason I share that this was such a huge win is because some of that strapped us financially right from the get-go when we were starting our business and trying to find a place to live in. And this was before we owned a house together. So, I really just wanted to bring that front and center is that, like, this is the power of 20 years of making of this episode that I'm gonna present today, which is we're gonna talk about both your personal credit and how to build business credit. Both, like I said, I'm very passionate and they do go hand in hand. And again, like I said at the beginning of the episode, credit worthiness is not to be confused with self-worthiness. So, let's dive in. I want you to think about your credit score is just really think about, like I said, your credit score does not define your self-worth. This episode is going to break down how to build your credit like a queen, personally and for your biz, like I said, without getting into a shame spiral of where you are currently at. And it's a great message, I think, today on learning how to stack that dough and build your score one step at a time. So let's dive in. I have a lot of notes I'm going to reference on this because I did a lot of research for this specific episode because I wanted to make sure it was really thorough. So, um, please remember that this show grows by you rating, reviewing, and subscribing. I'm starting to say that at the beginning. And most of all, share it with someone that you know that might not know me yet or Moms Making Dough that you might be able to share this information so that they can benefit for too. That's the biggest compliment you can give me. And the reason I chose this topic, I always had this in my head that I was going to do this is that not only am I super passionate and coming off those wins with Ryan, but it's also a question I get often from both one-on-one clients about building business credit and also one-on-one credit, one-on-one, even direct messages and personal friends of like, hey, I fucked this up on my credit. How do I fix this? And or like what should I do to build credit? And or what should I do to boost it? Or should I use it to buy this particular item or make this investment? So, like any good tool, it only works if you know how to use it. So, let's learn how to build your personal credit and keep and maintain it so that you can use it as a tool for growth. So, first up, personal credit. Let's talk about some myths first. What credit is and what it isn't. And here's what I want you to kind of preference is that I love to teach this concept. The best time to get credit is when you don't actually need it. So I am one of those people that likes to teach. If like you're applying for a credit because you want to go on this spring break with your friends, not probably the best time to get credit because you already have an intention with it. Were you talking about leveraging credit for intentions that are purposeful and productive? Fun can be one of them, but I don't really recommend that. Just like I don't recommend getting business credit if you don't have a plan behind it. So, why does your credit score matter? First of all, if you are looking to get an apartment, they're going to check your credit. No questions asked. Your credit is a symbol of not only your behaviors when it comes to money, but most of all, your trustworthiness. Can we trust this person to be disciplined where they are responsible enough that they can show us the reps in not only borrowing, but also paying back money? Really matters. I am someone that has tenant units, and honestly, I put a cap on their credit. I very rarely do exceptions with credit unless they can prove me the story on why they have messed up their credit, and they have the ability to explain that to me. So, renting, buying a house, what you pay for your loan at your mortgage rate, even at your closing costs, is going to be determined by your credit worthiness, that score number, which we're going to dive into. Insurance also is something that also looks often at your credit. Even utilities these days, if you go into a town to set up, you finally got that apartment, and now you have to go set up your electric account or your gas bill or whatever. They're going to start to look at these, and they can report to credit bureaus because they want to know, is this person going to pay their bills not only in a timely manner, but like, are they good for it? And also on job applications now, I find that many employers are looking at credit scores because they want to know, are you a liability or a potential asset when it comes to your finances? Can you manage the money that they are paying you, or are you going to be some people as a person that's just going to leave this job for more money because you can't manage the money you have had? So those are just a couple ideas on why your credit score really should matter. And let's talk about the difference between how your credit is measured. First of all, there is the FICO score, which is the one that 90% of lenders are going to use. FICO stands for Fair Isaac Corporation. And that Fair Isaac was basically two guys that were really just put together in the 1950s, a way that they could measure your credit worthiness and, like I said, your trustworthiness. And then today we have the new kid on the block. So if you look at the FICO score as the OG, but it is still the main one that most lenders use, versus the Vantage score. Vantage score is the newer kid on the block. You want to think of them like two different teachers grading your financial report card. They're both looking at the same student, which is you, but they might have slightly different grading styles. So, for example, Fair Isaac is going to really look at like the cold, hard facts, right? They're going to look at things like your payment history. They're going to look at the amount of balance, debt, what we call debt to income ratio. They're going to look at different items versus the Vantage score is gaining popularity. It's the one that is used by more free credit apps, which we're going to get into. They can generate a score even if you're newer to credit, which is very helpful when you are establishing in building credit. But it is the newer kid in the block. I think it was around early 2000s that was founded. Both use the same score range. So they use a range from 300 to 850, like I said. An excellent credit score where you're going to get the best rates is going to be the 750 to 850 range. Goods credit score is going to be 700 to 749, fair 650 to 699, poor below 650. So I want to kind of circle back here because, for example, on my tenant applications, one of the ways that I weed out tenants is that I do not accept a credit score lower than 700. So I put that in like I tell them that up front, I'm going to run at your credit score, which is totally legal. And I am, like you must have 700 credit score or above, is one of my requirements. Now, I don't necessarily tell them that that's it, but when I'm going through the applications, I look at that and I say like, hey, if I'm going to run your app, it is going to cost you, because that's an investment part of the application process for a tenant here. And I'm going to look at what that score is, and that's going to help me weed out through some of the applications. And payment history. Let's look at the factors that weigh into it. FICO, payment history, 35%. Extremely important, probably one of the most important things is your payment history. This is 35% of your FICO score. Credit usage. So if you have a $10,000 card, it's highly influential, not as much as the payment history, but this is about 30% of your FICO score. So this is if you had $10,000 limit on a card, they want to see $3,000 balance or below on this. Length of credit history. So this is where, again, in that example I shared with about my husband Ryan, 15% or less, it's not as influential, but it is important. All right. New credit inquiries. Okay. So this is something a lot of people don't know. You really want to time out your credit inquiries because they do last. Some of them last 2 years, some of them a little bit longer. Bankruptcies and foreclosures, those types of credit, um, I don't wanna say those blemishes last a lot longer on your score, and they're going to depress your score a lot longer. And I'm gonna get a little bit into detail with that too. Bottom line is that the FICO is what most banks and mortgage lenders are gonna look at. Now, like I said, as a landlord, I don't look at the FICO score so much. I use a credit reporting app to do so, where I do look across all 3 bureaus, because they do tend to report a little bit differently in terms of the score. VantageScore is what you'll see on, like, free apps. So, like, let's say Credit Karma, use Credit Karma or Mint. Those are more, like I said, it's generated with a free score. However, it necessarily isn't what the major lenders are going to use if you're looking to borrow, um, build a line of credit or get a credit card and or borrow money for something such as a mortgage or a car. Both are tools. They are a report card on your life, your financial payment history habits. You want to use them to track progress, not to punish yourself. This is huge. I find that most people avoid even dealing with their credit or checking up on it regularly basis. If you listen to my quarterly review podcast episode where I talk about my quarterly review for my personal finances, this is one of my steps is I just check in on my credit on a quarterly basis. Not on a monthly basis, on a quarterly basis. Now there are so many apps you can use to do this. Top app I recommend. I know a lot of people use Credit Karma. I just use personally myself Experian app. I like that one. That's what I've used. I don't have a preference or an affiliation with any of these. I'm just sharing some of the ones that I know are more popular that I've heard from both coaching clients and also friends that they use. Another one, Credit Sesame, Mint, which is owned by Intuit, and then My FICO is the couple that came up for when I searched what are the most used credit following apps. So, the biggest thing that I love about apps is that, first of all, it brings me to one of the core principles I teach here at Moms Makin Dough, which is you need to know your facts. So, facts being those are what's the real truth of where you currently are at. So it helps you know where you stand. So I like using the apps, like I said, Credit Karma, Experian. You can even use annualcreditreport.com where you can get that free credit report every year. But like I said, I pay for Experian because I want to know live time what that is. And I check in on a quarterly basis. Not only is what my score is, but if there's anything that needs to be disputed, anything that's been reported wrong. And I also look at my balances. And obviously, I know what my payment history. One of the absolute best ways to guarantee that you have good payment history is going to be to set up auto pay. Like this should be a no brainer, but you'd be shocked at how hard it is for some people to do. Never miss a due date. Payment history, again, is 35% of your score. Number 3, actionable tips for personal credit. Keep utilization under 30%. Like I said, if you have a $10,000 credit limit, then you want to make sure that you keep that balance 3,000 and under at all times, and even lower is going to be better, and pay off. Number 4 is one that I really think is often, ignored, and that's going to be don't close old accounts. So, I get this question a lot, and I'm one of those people, like, at one point in my life, I used to get retail cards like Macy's and Nordstrom and Home Depot, all of these cards that I now still have, and I leave open. I do not close them. A lot of them will close them on you automatically, but that's better than you personally going in and closing them, because it will show up as closed by the issuer rather than yourself. Because you want to have aging accounts on your credit. So you want to have older accounts that show a length of period of time that help you build that bigger score and work closer to that great score, that 750 to 850 range. And the number one for sure for personal credit is to dispute errors. They're more common than you think, such as like late payments. I had this one happen to me where I had a Kohl's card where it was on auto pay. They issued a new card, but they did not carry over the auto pay. And so I saw this on my report that I had a 30-day late, and I got so frustrated. I called them. I was able to dispute it. Now you can do it. It's so much better. This was like years ago, so I had to like write a letter and wait for it to come off. I want to say it took a couple months, but now you catch an error, you dispute it, and it will act. They can take care of it a lot quicker. They have usually departments just for this. And the other thing when I say dispute errors is that you also want to be really cognitive of, like I said, when you get inquiries, like how long does that inquiry last? Because they usually do fall off, but it's really critical for you to know how many inquiries you have on that file, on your credit file, so that you know that if you want to apply for credit, maybe you have one that's falling off. And again, different types of credit have different inquiry periods, because inquiries, like I said, are about 10% of your credit score. Couple of things that I really want you to think about is that, like, FICO versus Vantage score. It's like checking your kid's grades with two different teachers. One's a little stricter, so FICO is going to be a little bit stricter, and one gives bonus points for effort. That's the Vantage. But at the end of the day, if your kid's doing your homework, they're showing up. Both teachers will see that, they'll recognize, and that is same thing for your credit. So this is also too where I wanna kinda throw in a fun personal credit tip that I've really been playing with lately is, also shopping cards and making your credit card your assistant, not your enemy. And this is where we talk a little bit about, on a personal side, what your mindset shift could be on credit. This is also where it's critical to know what your spending habits are. And a really easy way to know what your spending habits are is to print out the statement of your, not only your bank account, but your credit card. This is something that I've been really leaning into the last year, where I actually do put things like my groceries on a credit card because they're on specific cards that I get like extra points or cash back. Um, and then I pay it off the next day. So I have a system where I know what days I kind of shop for groceries, and then I make sure I pay it on Friday. Challenge yourself to reward yourself. This is something I'm playing with right now. There are so many influencers now teaching you how to really travel for a lot less cost with points. Now, I should tell you this, a lot of these credit cards like Marriott or a JetBlue or a Delta, they are ones that are really They have higher interest rates, but if you are someone that does, like, sets up intercycle payments and or you pay your balance every month, theirs can be some real benefits. I just bought us, $3,000 flights to Croatia for our anniversary. I didn't get the whole flight covered, but I got about $2,000 with some of my points covered on our flights, and it really got me into this thinking about, like, when I'm applying for credit, doing it with, an intention behind it. So, knowing that I was gonna buy these flights, I applied for a Delta American Express. I hadn't applied for a card in over a year. They gave me a very significant credit line, and they also gave me a statement credit instantly when I bought my tickets. So it was very, very, I had done my research before, like what does the card cost per year? What is the average APR on it? And, but it was really fun and like awesome to get that instant gratification of like, hey, I got a $500 credit. And because I had points, I also had that I could transfer to Delta. I paid for, like I said, our flights pretty much um, almost in full. So next thing as we transition into business credit. So those are the things. One thing I want to tell you, if you are have a personal credit and you have some I don't wanna call what do I wanna call them? Some blemishes, on your credit, such as a bankruptcy, which, I don't quote me on this, I'm not sure if the rules have changed on this, and I did not look into this beforehand, but if you have bankruptcy, if you had a foreclosure, if you had a tenant a landlord that's reported you, for late rent, um, I want to say that, or utility company that has done that, which they like I said, they can do that. Um, you not to be discouraged in still putting an effort into rebuilding your credit. And one of the best ways to do on a personal side that is to get what's called a secured credit card, which is where you have basically you put up money. Let's say you start with a secured card for $1,000. There is tons of companies that do this now, and there's new ones coming on by the day. I saw one the other day. It was called, I believe it was called Chime, Chime, and do not, like I said, I'm not affiliated with this company. I'm not telling you to do this, but this is a strategy that I have found for people that are rebuilding their credit that is really, really helpful. This is also an unbelievable strategy for teaching your kids how to manage and build credit file responsibly, I have found, which is going to be a whole other episode for another day. But in the meantime, I just want you to think about using tools like that to build your personal credit and also fix some of those blemishes. All right, let's transition into business credit. Again, another personal story. I am a person that I had a speaking client when I was younger, my first business, and his name was Dustin, and he was the guy I credit, no pun intended, for teaching me and exposing me to building business credit. And he was a young guy, real estate investor, really, really just a hustler, awesome guy. I'm still friendly with him today. And he started and built a product around getting business credit, which exposed me to this concept. And I still to this day, it's one of my favorite things to talk about, to put into my financial plan when it comes to my business. And lately, I've been getting a lot of questions on this. So, that is going to be another episode. I'm going to break it up where I talk about business credit. So this can be separate. And I'm going to bring that into that will be next week's episode will be just on building your business credit profile. So, if you liked this episode on personal building your personal credit file, I really hope you share it with someone that would also benefit from this information that you found useful as well. And please remember to rate, review, and subscribe to this episode. To my podcast, Moms Makin Dough. And then finally, I wanted to extend an invitation and give you just a little bit of recap on just building your personal credit. Um, just like anything, before you apply for credit, I want you to set your intention. Start with a list of what you will do with the credit. And again, remember I just shared my story of the Delta Amex card. Now, the reason that one came up specifically is my intention was I knew I was about to buy and make a big purchase on a set of flights for a trip to Europe. So I, like I said, looked into the card beforehand and then I applied for it knowing that if there was probably some perks for me if I bought on that card. And not only did, like I said, I got an instant statement credit, I also got a certain amount of points, which just happened to be exactly what it would if I spent a certain amount of money. And I also was able to transfer points to that card and purchase flights where I got almost $2,000 worth of flights for free. So, just something to fun. That's a good example of setting your intention. I'm not a huge advocate, like I said, of doing anything without an intention behind it, especially when it comes to your money. The next part is check your personal credit first and really know what your FICO score is. Know where you are in from a factual standpoint. This is where I always teach facts over fantasy. Take one improvement action or growth action on your goal. So, what I mean by this is once you check that personal credit, again, which is part of my quarterly review process. If you haven't listened to episode 12 of my quarterly review process, where I say check in with your credit, is check your personal credit first and run your FICO score. Then put down what's one improvement action. Now, one improvement action might not be something you actually need to fix on your credit. It might be much simpler. It might be something like, I need to stop spending at Starbucks every day. It might be something that's like you realize by looking at your credit statement that, man, I've been really going overboard with this $8 coffee every day. It might be something else like, "Hey, I have a bunch of apps that are linked to my card that actually I'm not using anymore, and I need to start doing that." The cool thing about some of the apps I mentioned, I believe it's the Intuit app, Mint. They now a lot of them have a budgeting component to it, where they can actually look at like, "Hey, here's stuff that you have on auto pay," and you can actually go and like kinda, uh, cancel it even from the app. I think that's Rocket Money that does that. Again, no personal experience with it. I've had other people tell me that they do use that. And then a growth action might be like, hey, I'm going to purchase $3,000 Europe flights and I have this many points to use. I can transfer it to a Delta credit. I can also get a statement and I'll also earn another couple free flights by making the purchase on this new card. And there's so many things. So that's where it's like that's a growth action versus an improvement action. And then the third step, and just in closing, is I wanted to invite you, if you want my checklist on how I track and manage my personal credit, I am going to invite you, send me a DM, put Credit Queen in it. I will make sure that you get sent that template. And the other thing I wanted to announce is you are interested in I am so excited to announce this. I am going to be running a free money challenge. And that is going to kick off on May 1st. It's going to be with you, yours truly, where I will be doing group coaching. Um, and you do not have to have great credit to do this, especially because it's free. It is for anyone who wants to really start to shift their financial future in a different direction. Specifically, if you are a mom and you're looking to shift not only your mindset when it comes to money, but really shift the direction that your financial future is going with your family. And like I said, it's a completely free program. We're going to start with you because it always starts with you. So it is going to kick off on May 1st. It's going to be from 1 to 2 p.m. will be the live calls. They will be recorded, but I highly, highly recommend if you have the time, it's going to be a lunch power hour with me, yours truly, like I said. Please direct message me on Insta or Facebook. We are working on creating a link where you can sign up for it live. I just don't know if it'll be ready by the time this episode airs. So if you are looking to dive in to, just like I said, charting the direction of your course for your family's financial future, join us. It will be with a bunch of other women who are looking to do the same exact thing. And I can't wait to do this. I'm so excited. It's an idea I came up with just recently with all of the DMs with different questions I've got, and just really the reminder that shifting your financial future starts with what's in between your ears. And sometimes we need a little bit of coaching and guidance and community to really start to shift those. It Shifting your money mindset is not something that you do in isolation. It is something that we need a village to do. And I am so excited to do that. So if you are interested in joining my free Master Your Money challenge, please, 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 like I said, Instagram or Facebook, Kendra Hewitt, and I will make sure you not only start following me, but also that you get the link to sign up as soon as it is available. Um, Thanks so much for listening, and we'll see you next time on Moms Making Dough.